Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. LME 3-month copper. Over the last few months, prices utilized the flatlining medium moving average, currently at 82.96, highlighted in mauve on my daily chart, as a sort of a base to push and test higher. However, the top side has been capped by 3 separate, though not necessarily unrelated, resistances. The first was the April 2012 high at 86.65. This had been breached in late December 2023, but we only had the single close over it. The second resistance is the extension of the flatlining upper trend line of the June to August 2023 ascending triangle, currently at 87.50, which is highlighted in dark blue on my daily chart. This has not been tested, but it is still up there and is related to the April 2012 high, as it was created by the overflow in June and July last year over the same April 2012 resistance. The third resistance is unrelated. It is the purple coloured neckline on my daily chart of the February to April 2023 head and shoulders continuation pattern, currently at 86.08. This was likewise penetrated in late December, the same as the April 2012 high, but again only had the single close over it. And more recently, due to its declining angle, has helped cap the market 2 weeks ago with only once again a single close over it. The key element 2 weeks ago was indeed this capping action and a subsequent fall down through the 50% Fibonacci line of the October 2020 to March 2022 move at 85.56. Then last week tackling the congestion between 83.46 to 84.40. This congestion included the September 2012 high at 84.24, the February 2013 high at 83.50, the slowly declining long moving average, currently 83.39, and most importantly, 2 supports. The significant mauve highlighted flatlining medium moving average, currently 82.96, more on this moving average shortly, and the recently highlighted neckline of the mid-November 2023 to mid-February 2024 head and shoulders pattern, currently 82.50, which is highlighted in bright red on my daily chart. Now, last week I spoke about the opportunity for 2 possible pathways leading to 2 possible patterns, and I quote, "In the first, we could look at the action since the lows in October last year as a possible bullish halfway hesitation. It's a ragged pattern and a little too long in duration for my liking, but it could become that if prices punch higher and up through the resistances, which, to be obvious, doesn't look too likely right now. The second and increasingly interesting opportunity is to look at the action since mid-November 2023 to date as a possible head and shoulders pattern in construction, with the medium moving average, yes, here it shows up again, acting as a de facto neckline, though I have also drawn a bright red neckline a little lower than the medium moving average to help aid matters. This is all possible, but if it is, then we are towards the final stages of construction of the second shoulder right now, and prices need to drop back down to that neckline zone at least to fully build the pattern. As an addendum, we might be forming some other patterns, such as a declining triangle since late last year, but it is way too early to say if this is an option. So we seem to be closer to this head and shoulders pattern than to anything. This will then prompt the question, is it a topping action or a continuation? And for that, we'll have to watch carefully what happens at the medium moving average. And that's the end of a quote. This is quite a long quote, but it covers what was on my mind. At the end of last week, we had a break below the medium moving average in mauve, as well as the bright red neckline. But we've not managed yet to sustain or exploit that move lower. So I will lay off for the moment, indicating suggesting possible targets below for now. But I will keep a close eye on the developments at both the neckline and the medium moving average. LME 3-month aluminium. There was quite a lot going on here. To start with, we have the gapping move higher in December last year that led to a monthly key reversal up with a bullish halfway hesitation in the middle of the rise and horn top at the end of the rally. Then there was a subsequent drop, which was halted at the October 2022 base support, down at 21.56. This in turn led to a rise started 3 weeks ago up through two necklines, with a pair of reverse head and shoulders continuation patterns. One from the February to April 2023 move, currently at 22.19, highlighted in bright red on my daily chart, and one from the June to July 2023 move, currently at 22.57, highlighted in bright green on my daily chart. 2 weeks ago, the rise topped out at a third neckline, currently at 23.01, coloured in purple, of the October 2022 to May 2023 head and shoulders top pattern. And midweek, the week before, we saw a rejection of the bullish incentive and a drop down to around where the short medium moving average and medium moving averages, currently 22.29 and 22.39 respectively, as well as the bright red neckline and roughly where we are now. So with all these big moves, where does that leave us now? Well, 2 weeks ago I said, and I quote, "There is one pattern that has just completed its construction late last week, and unusually all elements are in the right order. Last Thursday the market made a bow tie formation of the declining short moving average, currently at 22.29, and the very slowly medium moving average, currently at 22.31, and the more or less flatlining short medium moving average, that's currently at 22.29. As I said earlier, the moving average went into the bow tie in the right order and have exited more or less in the right order. However, there is no clear direction from the moving averages. This makes the immediate impact of the bow tie crossover difficult to interpret. Is it bearish or bullish? As I say, the immediate answer is unclear. However, we can look at the longer term process for this bow tie formation. Thus, the theory goes that between 15 to 20 sessions after the crossover, the market will see volatility and, in theory, move in the direction of the moving averages, assuming they become clearer by then. Thus, I would suggest paying close attention to what happens between the 15th to the 22nd of February, as it may indicate the next significant direction. And that's the end of the long quote. This still all stands true and relevant, but last week another pattern has started to develop in my mind, and I've drawn it, unhighlighted, on my daily chart. It's a late October 2023 to date possible potential diamond pattern. It's not a pretty pattern, but I would pay close attention to the converging trend line of this for this pattern, which is currently at 21.81 and 22.52. Now, I'm not in love with this pattern. It's one to watch, but it does have merit. And if I'm not in love with it, I will easily retire if it does not perform. There's one more pattern that's developed, and it has been over last week and the start of this week, and that's a potential small 2 week long horn bottom, a variation of a double bottom. I'm not certain on this as yet, as it could easily turn into a bear flag, but I thought I would point it out so you could watch it developing, as I will be. LME 3-month lead. In mid-November 2023, the market reached its zenith at the same high we saw back in August last year, just over 2300, before turning around and dropping even faster and farther than its rise, back to new lows not seen since June 2023. In the process, it left behind a V-top to complement the earlier V-bottom seen in October last year, this time with a substantial extension from early December last year until 3 weeks ago. This extension ended up being a bull channel, and that's currently 2079 to 2150, which is highlighted in dark blue on my daily chart. I said back some 9 weeks ago, and I quote, "We have some mild congestion from October," that is October 2023. "We have some mild congestion from October in the 2090 area. But we really don't have that much resistance above until we start approaching the moving averages. Obviously the long moving average first, currently at 2122, as well as the interesting 50% Fibonacci line of the March 2020 to March 2022 move at 2135. And that's the end of the quote. Interestingly, it was the crossover combination of these moving averages plus the 50% Fibonacci line at 2135 and also the upper bull channel line, currently at 2150, that was what was at the same time a cusp in the market that saw prices punch up through all those resistances, and hold station 2 and 3 weeks ago over the next 50% Fibonacci line above, the November to December 2023 move at 21.59. The next significant resistance above was the lower trendline extension, currently at 2200, to the May to June 2021 descending triangle. This trendline extension helped cap the market, this time with assistance from the congestion at 2186, much as it did in June last year, as well as July and part of November. Interestingly, on the fast recent drop lower late last November, well, it didn't even register then. So whilst I'm still happy it capped prices over those recent weeks, I'm still cautious about being a strong resistance. Anyway, as I said last week, and I quote, "I even have a sneaking suspicion that prices may turn around and move back down into the broken bull channel. We'll have to wait and see," end of quote. Well, we have seen, and prices did indeed drop back down into the bull channel, punching down through all the moving averages and into the middle late last week, and in the middle late last week, down through the lower bull channel line, currently at 2079, and down below the psychologically important $2,000 level, a low not seen since March last year. This brought to my mind my comments from last week, and I quote, "2, maybe 3 questions have popped into my mind this week when studying the daily chart. The first is a fairly obvious opportunity for the action from mid-November last year to date to be a very large bearish halfway hesitation. If this is happening, then it is still under construction. The key levels to watch are what happens at the lower bull channel line and the December 2023 low at 2016. The second is really a big picture question, is whether the whole action since May last year is a huge big M top. This is such a big question that the previous idea of a bearish halfway hesitation may actually make up an integral part of it. Hence, I will just bear this question in mind. Finally, the third question is a related question to number 2, though a little smaller in scale. It's whether we have a large double top, even Adam type, formed between July to December last year. The answer to this will very much depend on what happens at the neckline should prices get down that far." End of quote. Well, this week we have some answers. The answer to the first question is yes, we have a large bearish halfway hesitation on the market right now. Thus, a primary target was in the 2062 zone, whilst the secondary hard to reach target X1 is in the 1895 zone. Last Thursday, the market reached the primary target, and today it's heading towards the secondary target. In the second question, the answer is also yes, we have a big M pattern, with primary target X1 in the 1880 zone and a secondary harder reach, much harder reach target X2 down in the 1758 zone. Finally, the answer to the third question is also yes, we do have a large double top, even Adam type, formed over July to December last year. Thus, a primary target X2 is in the 1875 zone, and a much harder to reach target X3 is down in the 1750 zone. Now, the only fly in the ointment seen in this week's action is that we have congestion and a trend line in the 2000 level. Beyond that, we have nothing until the March 2023 low at 1976, and then the 2021 low at 1908. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.